If I had to choose a theme for this update, it would be adjusting to a post-pandemic market. What this will look like is everyone's speculation, but we've already seen some turning points which we'll discuss. Hi, I'm Gordon Baker with RE/MAX Alliance Group, and today we're going to look back at the first half of 2021 and try and anticipate what's ahead for the next 6 months. The appreciation that we saw in the last half of 2020 has continued in the first half of this year. Here's where we are for price appreciation based on the weekly average sales price per square foot for the first 6 months of 2021 for certain cities across the Phoenix area. Chandler saw a 21% increase in the first 6 months of the year. Gilbert, 23%, and Gilbert mirrors Chandler in many ways, but on a price per square foot basis, it is about $10 per square foot less than Chandler. Now, Phoenix, the largest city in the area with over 500 square miles, saw a 21% increase, and it looks like it is reaching the top. Queen Creek came in at 27%, still showing a strong upward trend, and price-wise it is still less expensive than neighboring Chandler and Gilbert. Mesa, that covers 133 square miles and has a population of 500,000, saw an increase of 22%. Maricopa, 26%, and is one of the more affordable areas that looks to be leveling out. Glendale on the west side saw a 24% increase. Now, we've talked many times about low inventory, and that is still the most dominant factor, but I believe we've reached an inflection point that we'll talk about in a minute. But first, we can't overlook how low interest rates, which have almost been taken for granted. I remember back in the day, many years ago, when 6% was normal. And here's a graph showing the 30-year fixed rates for the last 10 years. Any upward movement in mortgage rates will impact buyers' purchasing power negatively. Just something to keep in mind. Now, we know where we've been, so what's on the horizon? Let's look at what is happening with the available homes for sale. It seems that March was that inflection point in listings. A consistent theme throughout the valley is that in March, the number of listings or homes for sale pivoted and started to rise. Let's look at the same cities in terms of homes on the market. Chandler is approaching the 2020 inventory levels, and listings have doubled from just 4 months ago. Gilbert, homes for sale, just went above 2020 levels and are now 3 times what they were in March of this year. And Phoenix has almost doubled from March and is equal to last year's level, while Queen Creek homes are now over double the March inflection point and above 2020 levels. Mesa inventory numbers have doubled also and are at levels we saw a year ago. And Maricopa is now 4 times the March low and above last year's levels. Glendale in the West Valley over 2 times the March low and above 2020 levels. Now, it must be pointed out that even at these levels, we are still at just 1 month's supply or less and still significantly below prior year levels. Do I think this upward trend in homes for sale will continue? Yes. And let me tell you why. Mortgage applications have reduced from last year. Why, you may ask? Well, I think it comes down to 2 things: buyer fatigue and diminishing affordability, even in light of historically low interest rates. Let's start off with buyer fatigue. I could tell you the story of a young couple, D&T for short. They know who they are, and we spent consecutive weekends looking at houses, writing offers, accepting the house as is, offering above list price with appraisal shortfall clauses with no success. At some point, it takes a toll and fatigue sets in. Then we have diminishing affordability. In the first quarter of 2021, a family making the median income in Phoenix could afford 63% of the homes sold. For the second quarter of this year, that number has probably gone down. As prices go up, the buyer pool shrinks. Before we get to the next point, if you learned something, do me a favor and let me know by liking and subscribing so we can keep in touch. Another very important reason why listings will increase in the next 12 months is the federal forbearance moratorium will end at the end of July 2021, in a couple of days. A large percentage of forbearance plans will be expiring in the next 6 months, peaking in September and October. Some estimates put the total seriously delinquent loans, those at most risk, which are 90 plus days past due, at 1.7 million. That's 1.26 million higher than before the pandemic. Now remember, as I've said before, real estate is local. Not all states are affected equally. Mississippi's non-current loan percentage is 8.3 and Louisiana stands at 7.7, while Colorado and Idaho are at 2.9% and 2.4% respectively. Arizona is somewhere closer to the bottom at 3.8%. And let's look at price reductions. Since that March inflection point, the number of price reductions has been increasing week over week, an increase of almost threefold since March. All these factors point to increasing inventory or homes for sale, which will put downward pressure on the rising prices that we've seen. But by how much is the question? If you'd like to see specific information about a city that we didn't highlight, text me at 480-326-8571 with your email address, and I'll be glad to send it to you. Otherwise, I'll see you in my next market update, if not before. Gordon Baker, RE/MAX Alliance Crew, have a good day.